Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Bitcoin eyes $108,000 as price action hits bull market pivot point. XRP eyes $6 as SEC acknowledges 3-spot ETF filings. Bitcoin faces pressure as demand for US Treasuries declines. Is a correction coming? Are spot Bitcoin ETFs being used for market manipulation? Analysts weigh in. SEC acknowledges wave of crypto ETF filings, signaling shift in regulatory approach. Bitcoin eyes $108,000 as price action hits bull market pivot point. Bitcoin, BTC, is showing renewed strength as it inches closer to $100,000, gaining momentum in sync with traditional assets like gold and stocks. With $98,000 acting as a key support level, analysts suggest a breakout past this pivot point could propel BTC to $108,000 in the short term. Bitcoin's recent rally and market sentiment. Bitcoin successfully maintained $98,000 on February 21, marking its highest daily close in nearly 3 weeks. BTC USD closed at $98,330 on Bitstamp, signaling a potential bullish reversal. The price action follows weeks of low volatility, leaving traders eager for a decisive move. U.S. macroeconomic data played a role, as jobless claims exceeded expectations, suggesting weaker labor market resilience and a potential shift in monetary policy outlook. Despite this, the CME Group's FedWatch tool indicates a near-zero chance of a Federal Reserve interest rate cut in March. Analysts predict Bitcoin to hit $108,000 next. Several analysts have highlighted $98,400 as a key pivot point, indicating that a successful break above this level could lead to significant upside movement. Trader Roman noted that if Bitcoin breaks above $98,400, it could swiftly rally to $108,000. Trader Patrick H. emphasized that flipping $100,000 into support is crucial for the next leg up. Really liking how volume is trending lower as price went down during this range. Let's hope for a breakout. Roman added. Bitcoin joins the risk asset rally. Bitcoin is now moving in sync with gold and stocks, which have both hit record highs this week. Gold's market cap surpassed $20 trillion for the first time in history. The S&P 500 also reached an all-time high, emphasizing a broader risk asset rally. Notably, gold has outperformed the S&P 500 in 2024, with a correlation of 0.81, according to the Kobayashi letter. Bitcoin versus gold, a performance comparison. Despite gold's impressive gains, Bitcoin supporters remain unimpressed. Timothy Peterson, author of Metcalfe's Law as a model for Bitcoin's value, pointed out. Gold is at a new all-time high. Congratulations to everyone who has invested in gold these past 5 years. You have almost doubled your money in that time. On average, Bitcoin has doubled every 16 months. Will Bitcoin successfully break above $100,000 and surge to $108,000? XRP eyes $6 as SEC acknowledges 3 spot ETF filings. The price of XRP has surged over 15% since February 6, fueled by optimism surrounding spot XRP ETF filings acknowledged by the U.S. Securities and Exchange Commission, SEC. With market analysts predicting a potential rally to $6, investors are closely monitoring XRP's next move. SEC spot XRP ETF acknowledgement fuels optimism. The recent bullish momentum in XRP's price is closely tied to ETF developments, with the SEC recognizing 3 spot XRP ETF applications. Nasdaq-backed CoinShares became the latest asset manager to receive an SEC acknowledgement for its spot XRP ETF proposal. The SEC has already acknowledged similar filings from Grayscale, 21 Shares, and Bitwise, signaling growing regulatory interest in XRP-based investment products. WisdomTree and Canary Capital have also submitted spot XRP ETF applications, further bolstering expectations of institutional adoption. On the global front, Brazil's Comissão de Valores Mobiliários, CVM, approved the nation's first spot XRP ETF, managed by Hashdaq's Nasdaq XRP Index Fund. While the Brazilian ETF has yet to commence trading, Hashdaq has promised to release further details soon. XRP futures market shows hesitation. Despite XRP's price rally, futures traders remain cautious. XRP's open interest, OI, plummeted 78% in early February, following a 26% price drop. While XRP has since gained nearly 20%, futures OI has only recovered by $600 million, down significantly from $4 billion earlier in the month. This suggests that trading volume remains relatively low, leaving the price action vulnerable to volatility and manipulation. Analysts predict XRP surge to $6. Several market analysts believe XRP could be on the verge of a major breakout. Polly, a crypto analyst, predicts a God candle, a sharp bullish spike, that could propel XRP to $6 within 10 days. This prediction hinges on the assumption that the SEC versus Ripple lawsuit will be resolved before the end of February. However, neither Ripple nor the SEC have confirmed any such development. Dom, another XRP market analyst, emphasizes that $2.50 to $2.80 is a critical resistance range. XRP's all-time high volume-weighted average price, VWAP, currently sits above $2.80, acting as a major resistance zone. To confirm a bullish breakout, XRP must close above $2.80 on the daily chart before targeting new multi-year highs. Will XRP break above $2.80 and rally towards $6? Bitcoin faces pressure as demand for U.S. Treasuries declines. Is a correction coming? The U.S. dollar index, DXY, has fallen to a 70-day low, raising concerns about the potential impact on Bitcoin, BTC, price. As global markets react to weakening U.S. economic indicators, traders are questioning whether Bitcoin's bullish momentum can withstand the pressure. U.S. dollar weakness and Bitcoin's price action. On February 20, the S&P 500 fell 1%, while the US dollar lost ground against a basket of foreign currencies. Over the last 6 months, Bitcoin and the DXY index have demonstrated a positive correlation, suggesting that Bitcoin may be vulnerable to macroeconomic shifts. Although US President Donald Trump's administration has been perceived as pro-business and pro-crypto, persistent inflationary concerns and weaker retail sales have sparked fears of stagflation, a situation where economic growth slows while inflation rises. According to Larry Adam, Chief Investment Officer at Raymond James, recent import tariffs and government budget cuts could have a negative 0.6% impact on U.S. GDP growth, while also raising inflation by 0.5%. If these trends persist, investor risk appetite may decline, potentially affecting Bitcoin's short-term price movement. U.S. Treasury market instability and Bitcoin's positioning. On February 20, U.S. Treasury Secretary Scott Bessent reassured investors that the government is not yet shifting to issuing more long-term debt, despite ongoing concerns about U.S. fiscal policy. While some analysts expected a shift toward longer-duration bonds, Bessent emphasized that such a move is a long way off. He also pointed out that Federal Reserve actions, including ongoing bond sales, continue to influence market conditions. The Biden administration's monetary expansion policies, often criticized as Bidenflation, have contributed to the volatility in Treasury yields. As uncertainty surrounds U.S. debt markets, Bitcoin's narrative as a hedge against inflation and monetary expansion could gain traction. Bitcoin as a reserve asset, growing interest from U.S. states. Despite macroeconomic turbulence, Bitcoin's fundamental adoption is strengthening. Several U.S. states have introduced legislation to allow Bitcoin to be used as a reserve asset, positioning it alongside gold. On February 19, Montana's Business and Labor Committee passed a Bitcoin reserve bill that would allow the state to invest in BTC and precious metals. Other states, including Texas, Pennsylvania, Ohio, New Mexico, and Arizona, have proposed similar legislation, recognizing Bitcoin as a monetary hedge. This growing institutional interest suggests that Bitcoin is gradually being reclassified from a high-risk asset to a digital gold equivalent. Will Bitcoin maintain momentum above $98,000? Bitcoin's ability to stay above $98,000 suggests that investors are beginning to acknowledge its hard monetary policy as an alternative to fiat currencies. However, challenges remain. Spot Bitcoin ETF inflows have slowed, with $125 million in net outflows recorded over the past 2 days, according to Farside Investors. Gold prices hit an all-time high on February 19, signaling strong demand for safe haven assets. Without a resumption of institutional buying, Bitcoin may struggle to break decisively above $100,000. Could Bitcoin's status as a reserve asset drive its next rally? Are spot Bitcoin ETFs being used for market manipulation? Analysts weigh in. Bitcoin's price action has remained stagnant around the $98,000 level since February 6, prompting speculation that large financial institutions and market makers are engaging in manipulative trading strategies. While some analysts suggest that Bitcoin spot ETFs are being leveraged to create artificial volatility, others argue that price movements are dictated by natural market forces. Allegations of market manipulation in Bitcoin ETFs. Technical analyst James CryptoGuru recently claimed that spot Bitcoin ETFs were being used to manipulate price action, alleging that institutions were forcing BTC lower to liquidate over-leveraged long positions. According to this theory, whales push the price downward when traditional financial markets are closed, allowing them to accumulate BTC and ETH at lower prices before prices recover. Some analysts also speculate that Binance and high-frequency trading firms play a role in orchestrating market corrections. Rumors suggest that whale chat groups and sophisticated trading bots collectively drive down Bitcoin and XRP prices, creating an illusion of panic selling. While these claims remain unproven, history has shown that market manipulation is not unheard of in both crypto and traditional finance. Institutional power in financial markets. In traditional markets, asset management giants such as BlackRock, Vanguard, Fidelity, and Capital Group control 57% of all open-end mutual funds and ETFs, according to Morningstar. With over $29 trillion in assets, their trading strategies significantly influence stocks, commodities, and even government bonds. This influence has led to multiple investigations. In November 2024, Texas Attorney General Ken Paxton sued several fund managers, accusing them of manipulating energy prices. In October 2024, Toronto Dominion Bank's U.S. broker unit agreed to pay $20 million to settle allegations of rigging the U.S. Treasury's market. Given this precedent, it's not far-fetched to assume that major players could also be influencing Bitcoin markets. Bitcoin's correlation with traditional markets. Despite manipulation concerns, Bitcoin's price movements often mirror traditional market trends. Over the past 6 months, Bitcoin has maintained a strong correlation with the US dollar index, DXY, and equity markets. A weakening US dollar typically boosts Bitcoin prices, while strong DXY performance has historically led to corrections. Major tech stocks like Microsoft and Nvidia also influence market sentiment, with traders often adjusting their crypto positions based on movements in the broader risk asset landscape. Additionally, Bitcoin spot trading depth, with a $35 million aggregate order book on Binance and Coinbase, makes large-scale manipulation more difficult, as it would require massive capital to artificially suppress price movements. Could Bitcoin's consolidation end with a breakout? Bitcoin has remained in a tight range between $95,500 and $98,000 since February 5, leaving traders wondering when the next breakout will occur. While some believe that institutional players are stalling a rally, others argue that ETF inflows and macroeconomic factors will ultimately determine the next major price movement. Could spot Bitcoin ETFs actually be fueling a bull market instead of suppressing prices? SEC acknowledges wave of crypto ETF filings, signaling shift in regulatory approach. The U.S. Securities and Exchange Commission, SEC, has recently acknowledged multiple crypto-related exchange-traded fund, ETF, filings, covering staking, options, and altcoin ETFs. This rapid acceleration in reviews and approvals indicates a softened stance on cryptocurrency regulation, particularly since Donald Trump's return to the presidency in January 2025. SEC reviews a surge in crypto ETF proposals. Between February 19 and February 20, the SEC formally acknowledged at least 6 ETF filings submitted by Nasdaq ISE and CBOE-BZX. These proposals seek regulatory approval for options trading on major Bitcoin and Ether ETFs, new altcoin ETFs, including XRP, Litecoin, and Solana, staking for crypto ETFs, allowing funds to generate additional yield, in-kind redemptions, which would improve tax efficiency for investors. The increased number of filings highlights growing institutional demand for diversified crypto investment products, particularly as crypto ETFs continue to gain mainstream adoption. Notable ETF filings and market implications. Among the key proposals under SEC review: BlackRock's iShares Bitcoin Trust, IBIT, the largest spot Bitcoin ETF with nearly $57 billion in assets, is seeking approval for options trading. Grayscale and Bitwise Ether ETFs, CBOE has requested permission to list options on these funds, which could significantly increase trading volume and institutional adoption. XRP ETF filings. The SEC is reviewing proposals from WisdomTree, Canary, and 21 Shares, with Bloomberg Intelligence estimating a 65% approval chance. Solana and Litecoin ETFs. These filings have higher approval odds, with Bloomberg setting estimates at 90% for LTC and 70% for SOL. Staking for ETFs. 21 Shares is pushing for staking approval within its Ether ETF, a move that could enhance returns for investors. The SEC's openness to discussions on staking has sparked speculation about a potential regulatory framework for proof-of-stake cryptocurrencies. According to Fox Business reporter Eleanor Terrett, the SEC is actively engaging with industry players to draft guidance on staking-related ETFs. Why this matters for the crypto market. The regulatory green light for staking and in-kind redemptions would be a major milestone for crypto ETFs, making them more tax-efficient and attractive to institutional investors. Additionally, approvals of altcoin ETFs could further legitimize the crypto industry in traditional finance. In February alone, Coinbase launched SOL futures contracts on its regulated U.S. derivatives exchange, a move that typically precedes ETF approval. Franklin Templeton introduced a dual Bitcoin and Ether ETF, marking the second crypto index ETF to launch in the U.S. this month. Hashdex introduced the Nasdaq Crypto Index US ETF, NCIQ, on February 14, setting the stage for more diversified crypto investment vehicles. Will 2025 see a wave of crypto ETF approvals? With increased regulatory engagement and institutional demand, could spot XRP, Solana, and Litecoin ETFs be the next in line for SEC approval?